the next big way that business owners and businesses can save with the new tax law is the Section 179 cap. So Phil, can you tell us a little bit about that one and how it works?
Yeah, with Section 179, with it doubling, essentially, it works very similar to bonus. The actual procedures are a little differently when you actually go to prepare their return, but in general, it operates very similar. If you're a large producer that buys millions of dollars assets each year, it allows you to write off up to 2.5 million of those. Now, there is a couple other limitations you have to deal with, but limiting that from 1.5 to 2.5, that's a kind of a huge jump from there.
Absolutely.
And you can use Section 179 in conjunction with bonus. It allows a lot of tax planning to determine, okay, should we take 179 on this, or should we then take bonus? The main couple difference why you would take 179 compared to bonus is, so states have different rules than the federal, and a lot of states either they don't allow bonus at all, and or they allow Section 179 either in full or part. So most of them don't allow bonus, but they do allow Section 179. So like here in Georgia, where Georgia does not allow bonus, but they do allow full 179. Say your business wants to, has a lot of assets they want to place in service. If they place in service $100,000 of assets and take bonus on that, 100% bonus like we mentioned before, and they reduce their income for federal purposes, when you get to the state side, you have to essentially add that back. So you don't get that deduction. You only get 20% of that deduction. So if you then decide to take Section 179, like we are in Georgia, there's no differences. A lot of times you're reducing the income for federal, reducing the income for Georgia, and getting a better outcome in the year that you acquire those assets.
Yeah, and if you think of like a construction company who typically buys 1.8 to 2 million in equipment annually, last year they had to spread some of that over multiple years. With this change, they're able to expense the full amount in the year of the purchase, and that keeps that cash in the business for the small business owner.
Talking about the last two items just teaches me that I'm very wise just to pay to have my taxes done.
Definitely have a good, have a good CPA, somebody to talk with about these things, because there's some times where, depending on your income, you may not want to take all that depreciation in year one. You might be better to expand that, depreciation over several years and not take that big hit in year one. It just depends on kind of how you did for that year. So there's a lot of kind of tax planning opportunities, and you can't just look at one little piece and put the number on the form. You kind of have to look at the whole picture to see if you're making the best decision.
Click the link in the description to download our free PDF, 10 Ways the New Tax Law Could Reshape Your Bottom Line.